if Europe is bluffing, Cyprus is ready to call that bluff.
Well, I mean, this is the horrible thing here, is that they've called this referendum after a default date, after their bailout program expired. The cost to the Greek economy is so substantial in the very short term, and perhaps in a lasting way, that if this is bargaining, it's coming at a great, great price to the Greek people.
They're playing with heart, though. If this is a game of chicken, they are playing with real heart.
And look, and there clearly are years of mistakes here involved. I mean, the fact that, you know, the Eurozone generally, with this broad-based QE program, for example, is supporting economic growth in a way that it hasn't in the last few years. And, you know, structural reforms that are painful, you know, might be accompanied with short-term stimulus, which wasn't the case in the last few years. But in the current juncture, you know, Greece is being cut out from that. And it's not certain that it will get back in on that. And so what you see in the marketplace, what I think is very interesting right now, is that if you look at Portugal, spread widening in Portugal and the rest of the periphery is 25 basis points and under. That's a tiny influence.
Very tiny. That's not at all what it looked like in 2012.
Exactly.
Yield on the 10-year Portuguese note is still below where I believe the U.S. 10-year is.
Yeah,
so
it's a bit above. So fundamentals have changed since 2011.
3.13% is fine.
Yeah, it's very important to understand that fundamentals have changed since 2011. 80% of Greek debt has migrated to official holders. The European banking system is recapitalized. I think it has about 1.4 trillion in equity capital, and private holders of Greek bonds, it's about 46 billion euros, which includes Greece itself. So, you know, the ability...
By the way, private coupons got paid last week, even as Greece decided not to pay the IMF.
Yeah.
So they're still paying private debt holders.
But, you know, the point is that all these worst-case scenarios, the whole backdrop, particularly, again, you know, 1.1 trillion in QE over 18 months, you know, 320 billion in Greek debt over 16 and a half years, that the numbers don't imply a contagion. And, you know, the whole point of all of this being a crisis, it would require a contagion for this to be a financial crisis.
Would it be a crisis? Would there be a contagion if Greece was thrown out? You know, Thomas Piketty this morning was saying that markets would then start ganging up on the next weakest member of the EU.
Yeah, I don't think that's necessary conclusion. I think we can all worry about that to some extent. Obviously, there's been a bit of spread widening, but I don't think that the market believes any other Eurozone members would willingly follow the Greek example.
Although, as we pointed out earlier, the head of Podemos in Spain, the anti-austerity party there, has already put up a new picture of him with Alexis Tsipras on Twitter, sort of trying to express the camaraderie between Spanish anti-austerity groups and Greek anti-austerity
But the Spanish communists aren't necessarily a very powerful party.
Okay, fine. They're
colorful and interesting.
But look at Greece and see, I mean, if this is going to be the way forward, I mean, again, this is not a finished story yet, but if you're going to see what happens to the Greek economy, inability to import key necessities, these sorts of things when a financial system is shut down, and with no change on the ECB's part in ELA, just frozen. You know, this is a very bad outcome.
And that ELA announcement is certainly what we are really looking out for today. Just quickly, Stephen, do you think we are not paying enough attention to the correction in Chinese equities?
Look, I think that what's remarkable about this one is that if you look at the correlation between A shares and Hong Kong listed A shares, it's less than the correlation between U.S. and European stocks. You know, you have a remarkable run-up in a part of the Chinese market. You have serious issues of margin calls. But unlike 2007, we don't believe this is the peak in the global economy. So it's a very bad comparison to say that it's entirely over with in China.